When it comes to investing, all investors are looking for an edge. Whether that's performing deep dives and performing analysis to find undervalued stocks, or simply just following what the smart money is buying. These are the top hedge funds around the US. After all, these are billionaires and they simply have an insight whether they want to say they do or not. I recently went through 10 of the largest hedge funds here in the US based on assets under management to determine what is the most owned Dividend Aristocrat stocks across this group. And again, to be a Dividend Aristocrat, you must increase your dividend for at least 25 consecutive years. And in today's video, I'm going to be unveiling that research and showing you what is the top 5 most owned Dividend Aristocrat amongst these top hedge funds. But before we begin, do me a huge favor. Click that like button down below. Subscribe to the channel so you're notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is The Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could see their latest top 10 stocks to buy right now. All right, let's jump back into today's video, taking a look at 5 of the most widely owned Dividend Aristocrat stocks amongst the top hedge funds based on AUM. And what we're going to do is we're going to go from the 5th most widely owned and work our way towards the most owned, or the hedge fund with the largest position in a Dividend Aristocrat stock. So what we're going to do is we're going to begin with Dividend Aristocrat number 5, which is Sherwin-Williams Company, stock ticker SHW. Sherwin-Williams is a well-known Dividend Aristocrat that is in the home improvement, and if you've ever done any home improvement around painting, then you've likely come across a Sherwin-Williams product. The company currently has a market cap of $82 billion, actually making it the smallest company on our list of 5 Dividend Aristocrats today. And over the past 12 months, the stock is up 45%. 2 large hedge funds have positions within SHW. The first being D.E. Shaw, which has a $423.5 million position. The second is Citadel Advisors, led by Ken Griffin, which they have a $250 million position. As the year progressed from the start of 2023, D.E. Shaw was seen increasing their position in shares of Sherwin-Williams. However, given the run-up in the past 12 months of 45%, which we just saw, in the latest quarter, Q4 2023, they slightly trimmed their position. Ken Griffin and Citadel Advisors also trimmed their position, but a little bit larger trim, as they brought down their position by 35% in Q4, but still, as we've seen, a sizable position. In terms of the dividend, SHW is a Dividend Aristocrat that pays an annual dividend of $2.86 per share, which amounts to just 1% dividend yield. However, they have been more well known for their dividend growth, as they have a 5-year dividend growth rate of 15%, and they have grown their dividend for 45 consecutive years and counting. Based on this dividend information, here's how much those top 2 hedge funds are earning just in dividend income this coming year. D.E. Shaw, with their 1.36 million shares, earns roughly $3.9 million in dividend income. Citadel and Ken Griffin, with their 797.7 thousand shares, earns roughly $2.3 million in dividend income. So that was Dividend Aristocrat number 5. Now we're going to move down the list into Dividend Aristocrat number 4, which is Procter & Gamble, stock ticker PG. Very well known for many of their consumer packaged goods out there, with many very popular brands. To cover some, they own the likes of Tide, Gain, Bounty paper towels, Puffs facial tissues, Charmin toilet paper, Pampers, Tampax tampons, Braun and Gillette razors, Head & Shoulders, Old Spice, and the list goes on and on, as you can see here. The company has a market cap of $379 billion, and over the past 12 months, the stock is up 15%. Procter & Gamble is trading near its 52-week high right now. It's not a company that's going to knock your socks off when it comes to growth, but they're going to keep chipping away and be that steady position within any portfolio. Bridgewater Associates happens to be the largest single hedge fund here in the US, and they are led by the likes of Ray Dalio. And their largest single stock position is Procter & Gamble, stock ticker PG, which we're talking about right now. They currently have a position of 4.64 million shares of Procter & Gamble that are valued at $680.5 billion. In terms of dividends, Procter & Gamble is not just a dividend aristocrat. They are, in fact, a dividend king, having increased their dividend for more than 65 consecutive years. Again, you just need 50 consecutive years to be considered a dividend king and 25 consecutive years to be considered a dividend aristocrat. Procter & Gamble pays an annual dividend of $3.76 per share, which equates to a dividend yield of 2.3%. Based on this dividend information, here's how much Ray Dalio and Bridgewater receive in dividend income from Procter & Gamble alone. Given that they own 4.64 million shares of PG, that will earn them roughly $17.4 million in dividend income. And that leads us to Dividend Aristocrat number 3, which is Johnson & Johnson, stock ticker J&J. Johnson & Johnson, as you know, is a massive healthcare company, more well known for a lot of their consumer health brands, such as Tylenol, Motrin, Listerine. However, in 2023, they spun that off into its own public company, now known as Kenvue, leaving the company now with Johnson & Johnson, which is the pharmaceutical segment, as well as their medtech segment, which is more focused on medical devices. The company currently has a market cap of $390 billion, and over the past 12 months, it's eked out a 3% gain. Over the past year, the stock has been trading in a range of 150 to 170 for much really of the past 3 years. When looking at the top hedge funds, there's 2 large hedge funds with sizable positions within Johnson & Johnson. One being Bridgewater Associates and Ray Dalio, again, a notable dividend investor, as they have a $435 million position. The other being 2 Sigma, as they are the 4th largest hedge fund in terms of AUM, and they have a $326 million position in J&J. For Ray Dalio and Bridgewater, they haven't really made many changes when it comes to their J&J position. However, when it comes to 2 Sigma, they actually almost sold out entirely of their position in Q3, but with the turn down in the stock, they have added it right back, and a sizable position at that back in Q4 2023. In terms of the dividend, J&J is also a dividend king, much like Procter & Gamble, with more than 60 consecutive years of dividend increases. They currently pay a dividend of $4.76 per share, which equates to a dividend yield of nearly 3%. Based on this dividend information, here's how much those top 2 hedge funds are earning just in dividend income this coming year. For Bridgewater, with their 2.77 million shares, they're going to earn roughly $13.19 million in dividend income, and 2 Sigma, with their 2.08 million shares, are going to earn just under $10 million at $9.9 million. And that leads us to Dividend Aristocrat number 2, which is the Coca-Cola Company, stock ticker KO. Another global brand, another consumer brand out there, and the largest beverage company across the globe. They currently have a market cap of $264 billion, and over the past 12 months, shares of KO are up 2%. The 2 largest hedge funds with sizable positions in KO are both, to no surprise, Warren Buffett and Berkshire Hathaway, and Ray Dalio again and Bridgewater. Warren Buffett has a $23.57 billion position, with Ray Dalio and Bridgewater having a $471.6 million position in shares of Coca-Cola. For Warren Buffett and company, not only does he love the stock, but he loves the product, having it on a regular basis. And within the Berkshire portfolio, there hasn't been much change when it comes to KO, as this is a position that Buffett has owned for a number of decades. And really, when you look at Ray Dalio and Bridgewater also, they haven't really made many changes at all to their position in KO. These types of companies, similar to, as I mentioned, with Procter & Gamble, are stable, reliable companies with strong free cash flows that support not only a dividend today, but a growing dividend in the future. Looking at that dividend, this is yet another dividend king on our list, as they have paid a growing dividend for 61 consecutive years and counting. They currently pay an annual dividend of $1.94 per share, which amounts to a 3.2% dividend yield. Based on this information, here's how much those top 2 hedge funds are earning just in dividend income this coming year. Warren Buffett and his 400 million shares earned him roughly $776 million in dividend income from KO. Ray Dalio and Bridgewater and their 8 million shares earn roughly $15.5 million in dividend income from the likes of Coca-Cola. And that leads us to one of our most widely owned dividend aristocrats among the top hedge funds here in the US, and that is ExxonMobil, stock ticker XOM. ExxonMobil is a leading oil and gas, even natural gas producer here in the US alone. The company currently has a market cap of $415 billion. However, over the past 12 months, shares of XOM are down 6%. Looking at the stock chart here, you can see that really over the past 18 months, shares of XOM have been trading in that range of $100 up to $120. Looking at these top hedge funds, the two largest hedge funds that have positions in XOM are Renaissance Technologies, ran by Jim Simmons, as well as D.E. Shaw, which is David Shaw's hedge fund. Renaissance has a $450 million position in Exxon. This is actually a position that Renaissance sold out of almost entirely in Q2 2023, but in the most recent quarter, Q4, they got back in, which means they are looking for XOM to appreciate in the near term. For D.E. Shaw, they have a $507 million position, also a stake that they grew by 200% over the most recent quarter. Based on both of these hedge fund moves, they're both looking for near-term movement to the upside when it comes to Exxon. Both of them combined pouring in nearly $1 billion into shares of Exxon. In terms of the dividend, shares of Exxon currently pay a dividend of $3.80 per share, which equates to a dividend yield of 3.7%, the highest on our list today. And they have increased their dividend for more than 40 consecutive years. Based on that dividend information, here's how much those top two hedge funds are earning just in dividend income this coming year. For Renaissance, with their 4.5 million shares, they're going to earn roughly $17.1 million. For D.E. Shaw and their 5.07 million shares, they're going to earn roughly $19.3 million in dividend income. When it comes to stocks, it's still very important to perform your due diligence. However, peeking and seeing what the smart money is buying is a valid strategy. However, you must know that we don't know about their positions they're adding or positions they're selling until they could be completely out of the stock, or they could have doubled the position, because they have to file what's called a 13F filing that comes out roughly 45 days after the latest quarter. So all of these Q4 buys that we saw didn't have to be reported until mid-February. Down in the comments section below,